Haldea also joins us from the Prime Data Group as well to talk to us about this data that we're just talking about, the rush for the markets and the rush for some of the promoters and private equity players to check out. How should we look at it, Pranav? Glass half full, that the markets are so vibrant that there are a lot of IPOs, or glass half empty, that a lot of promoters as well as private equity players are looking at booking the profits?
Well, thanks for having me. No, I think what you've seen is tremendous amount of activity in the market over the last couple of years. Primary market, as we know, always follows the secondary market, and ever since 2022, you've kind of had a secular run in the secondary market, which has resulted in a deluge of issues in the primary market as well. As far as the exits that you spoke of, promoters exiting or private equity and venture capital investors exiting, and I was just looking at the data, and you've seen exits worth 4.27 lakh crores already this year versus 2.26 lakh crore, during the same period last year. I don't think that is a negative. I think it's a sign of a maturing capital market ecosystem. We have to realize that several of these private equity and venture capital investors came in, invested in these companies 6-7 years back when they were very small. Of course, represented a much higher level of risk as well, and they need to get an exit as well. And only if, when they get an exit will they get fresh capital to deploy in newer set of companies. So I think this is a sign of a maturing capital market ecosystem. So no worries on that front.
Well, more than 16,000 crore has already been raised in August month. Also, it seems that we will be easily surpassing the funds that we have raised in 2023 in this calendar year itself. So, do you expect a similar kind of fundraise to even continue for the remaining part of 2024, similar 16,000 crore of fundraise? Are you expecting in the coming months as well?
Well, I think as you briefly touched upon, the filings look extremely strong. In fact, you had 16 filings in the month of July, and you've already had 17 filings in the month of August. And there are several more which are in the pipeline. The ones which are already sitting with SEBI approval, there are 22 such companies which are looking to raise 20,000 crores. And like you mentioned, Bajaj Housing Finance is one of the larger ones out of those. There are another 44 companies which have already filed with SEBI for approval, and cumulatively, you could look at a total fundraise of over 100,000 crores. Of course, this includes the mega issue of Hyundai Motor, which is expected sometime this year. Also, some of the new age companies, Swiggy being one. In fact, over the last couple of weeks, there's been a heartening development as well. You've seen some of these new age companies like First Cry and Unicommerce coming to the market. We have to go back to 2021 to look at this. At that time, you had the first set of new age companies listing. And of course, the story after that was not extremely positive. There was a fear that, you may not see any of these companies coming to the market for the foreseeable future. But I think that's changed. And even as we speak, there are several such companies which are looking at filing their documents with SEBI.
Okay, but is there anything to get nervous around the quality of the companies that's coming in? You of course have been a long time follower of the kind of IPOs that come in and what comes into the primary market. What's been your own assessment? Is the quality still intact? Because I do understand that the Indian market is so vibrant, and that a lot of SMEs are right there at the inflection point that they might be ripe for coming into the proper ecosystem of the listed entities. Is that the case, or the quality is getting a bit diluted here?
Well, so I think first of all, we need to segregate between main board IPOs and SME IPOs. So let me first speak about the main board IPOs. And what Somit spoke of earlier in terms of the OFS amount being raised versus the fresh capital amount being raised. So I think, that's a very important data point. A lot of the companies which are now coming up with IPOs, like I was just mentioning, have had several investors, private equity investors previously. They've gone through multiple rounds of due diligence. So the comfort level which retail investors can have now when they come out with an IPO is far higher. If we go back to the 90s or even to the early 2000s, at that time you used to find most of the companies which are coming to the market were primarily raising fresh capital. And what you also saw as a result of that, a lot of these companies either did not perform well or simply vanished with the investors' money. So while often it's said that look, if the OFS component is very high in an IPO, maybe it's not a good investment. But there's a flip side to it as well. The flip side being that the company has already reached a certain scale. It would have certain governance practices already onboarded. There would be institutional investors who have already invested in the company. So I think the quality of the companies which are coming now to the main board are far superior than what we saw maybe 20 years back. The SME segment, of course, is a different cup of tea. As we know, these are very small companies. Investors, I think, need to be extremely wary before investing in these companies. You've seen the kind of subscriptions figures which are going around. In fact, I was just looking at the data, and very interestingly, in 2019-20, which is just about 5 years back, the average number of retail applications and SME IPOs stood at just 408. Only 408 average retail applications. That figure today for the year 24-25 has gone up to 2.13 lakh average applications. So you're obviously seeing a lot of retail interest coming into this SME segment. The kind of listing gains that you're seeing, the average listing gain in this segment has been 78%, which is obviously drawing a lot of retail investors into this space. My advice would be that investors need to be extremely wary before investing into these companies and study them extensively before investing.
Okay. So when it comes to fundraising in the secondary market, QIP, rights issue, preferential equity is something that has been gaining traction. FY25 amount, FY25 on a full year basis, it seems like we'll easily cross FY24 amount that we had done. Which sectors or segments are we seeing most of this fundraise happening, and why, according to you, rights issue is still the least preferred way of fundraise when compared to QIP and preferential? Is it because the process is quite complicated compared to the other two?
Absolutely, absolutely. And you've already seen SEBI has recently floated a consultation paper in this regard. To not just reduce the timeline for the rights issue, but also making the entire process far more streamlined so that it's used more often. QIPs, on the other hand, you've always seen it's a bull market product. So whenever you've seen bullish markets, you've always seen higher QIP fundraising because promoters are able to raise capital at higher valuations. Of course, the other aspect about QIPs is that this is all fresh capital which is being raised. So typically, when the economy is doing well, companies are looking at expanding, deploying fresh capital. That is the time when you see a pickup in QIPs as well. Typically, mostly from financial services. So of course, you have banks coming in with larger QIPs, but at the same time, infrastructure and real estate companies also. You see larger ticket sizes from these companies.
Okay, point taken. Thanks so much for making time and speaking with us today. Appreciate you joining us on the show.
If you like this video, then like, share and subscribe to ET Now.